Hi, Hugh from Oak Park, Chartered Accountants out and about in Wellington. I've got 3 important tax and legislation changes for pharmacists to update you on. Firstly, payday filing. Now, you're used to doing your PAYE once a month, right? As from 1 April, you need to file your monthly schedules every pay day. So a lot of pharmacists are weekly pay, so that's a lot more work unless you're on payroll software. IRD are essentially forcing pharmacists and other small businesses to use payroll software. We have done at Oak Park an analysis of the 6 main payroll software providers, and we've got that for you if you follow the link that's coming up at the end of this. Okay, that's the first thing. The second change is if you have a rental property that is heavily leveraged, so say 70% debt or more, then you're making a tax loss, right? For the income year beginning 1 April, you're not going to be able to offset that tax loss against your pharmacy business income or other income. You're going to have to wait till you make a profit on the rental property. An exception is if you have a pool of rental properties and you have some making profits, some making loss. But of course, how that income tax refund you get for your rental property is part of how you fund your rental property investment, and that is a cash flow effect that you want to think about. It may affect your decision to buy another one. Okay, number 3, coming into effect soon are a number of changes to employment law. Now, most of these relate to, a lot of these relate to unions, but there are 3 that affect pharmacies. The first is on 1 April, the minimum wage goes to $17.70, up $1.20. Now, this is going to have a concertina effect on your lower paid staff. So those on $18, $19, $20 an hour, they're going to wonder why the ones below them have automatically jumped to $1.20, and that's something you're going to have to plan for and deal with. The second of the employment law changes is that from 6th of May, prescribed rest breaks are restored by law, unless you have agreement and it's an employment agreement. The third thing is if you have 20 or more employees in your pharmacy, 90-day trial periods are gone from the 6th of May. Okay, so if most community pharmacies would be under 20 employees, so they're okay. Okay, the final thing is just today the tax working group has released their report, or the government has released their report, and they are recommending a capital gains tax amongst other things. So we'll break that down for you at some later date once we know more. But certainly the bad news is that will tax the capital gain on your pharmacy. Okay, any questions, ask your accountant. If you're worried about what he's going to charge, you can call me. I won't charge you anything. Always happy to talk to pharmacists around the country. All right, this is all from me, Hugh Lopdell from Oak Park. Talk to you next month.